Okay, this is an additional presentation on statement of cash flows. And what's tricky about it for our class is that, cash flows is a really important statement because it tells you without any accruals, deferrals, or journal entries exactly how much cash changed in an organization, because that is, you can't affect cash. Cash is cash. So this is a very, we're going to do a real simple one, which is the extent of what you need to know. I don't have to get into a lot of theory here or anything like that. So this clip right here is from the textbook, and it's got a really nice high-level description of what operating activities are, investing, and financing. And this statement is super important to investors in terms of evaluating future cash flows for a company, which is why you invest. And they gave us these transactions, and what you want to think about is how do they affect cash, okay? So the first one was an additional investment by the owner, Chris Clark. Okay, so an additional investment would be a change in an equity account. So I'm going to put down investment by owner. And that would be $25,000. And the way to think whether or not that's positive or negative, where you want to think about how it affected cash. So if the owner put money into the business, that would increase cash, right? Okay. Then the next one would be in a purchase of land. All right. So this is changes in long-term assets, and I'm going to put here. I'm going to put here, say land or equipment. Okay. Okay, land or equipment would be a good example. We got an extra thing here, don't we? But in any event, so we've got a purchase of land, so that would be a cash outflow. Just think about how it affected land, how it affected cash. If we bought land, cash would go down, right? So I'm going to put in a negative 20,000. There's a decrease in cash. Then we got an operating activity here, which is fees earned. This would be, I think the way to look at this is cash received from customers. All right, that's what it is, because sometimes you can earn money, but not, earn revenue, but not get paid, right? So we're going to say cash received from customers. And they say in the heading here is that this is cash flow activity. So we've got $7,500 in cash that came in from customers. Okay, and that would increase cash, right? So it would be a positive number. Then payment of expenses. I'm just going to put payment of expenses. If we paid expenses, cash would decrease. So that's $3,650. All right. What else do we have? We got a payment of an account payable. So we paid the payment of payable. We'll just say that. And that's minus $950, because again, cash would be going down if we made a payment. All right, and then we've got a withdrawal by the owner. Put one more line in here. Okay, a withdrawal by the owner. And he took out how much money? He took out $2,000. Okay, so now I could put a subtotal in here. The total amount received from customers. Or no, the total amount of operating activities for the company. Operating activities for the company is $2,900 of positive cash inflow. For investing activities, we invested $20,000 in land. And how did we finance it? The owner invested $25,000 and then withdrew $2,000. So we've got a net of $23,000 for investing activities. So then our total would be net cash flow. And we would just say 2,900 plus the 20,000 plus the 23,000. Okay, so that would be the net cash flow from just these transactions for this company. Okay, and you're simply dividing them up between operating, investing, and financing, and you're thinking about how they affect cash. Okay, how each transaction affects cash. That's how it's going to go on the statement. So let me know if this doesn't clarify things for you. Maybe we could do one with more detail, but sometimes I think a high-level, simple one is cleaner and easier to see what's going on. Okay,